Yeah, the market fell. Clearly, yep, the market fell. Fitch downgraded the US, causing the market to fall. Yep. The dollar rose. The bonds fell. The dollar rose. The market dropped. You know, very simple. So in today's video, we're going to take a look at everything. We're going to take a look at what the next steps are for the market. Apple, finally, this piece of crap, the market fell. All right. So in today's video, we're going to take a look at everything. The S&P 500, the NASDAQ 100, the Russell 2000, the dollar, the bonds, everything all in between. All right. So without further ado, let's get started with the video. All right, number one, let's first take a look at the dollar. All right, so the dollar is very, very important because it has an inverse relationship to the market. When the dollar is strong like this, then that means that the stock market is weak. Okay, so yesterday I was showing you guys how the MACD indicator on the dollar was pointing at an explosive move to the upside. We had the MACD indicator yesterday in yesterday's video. It was moving down on the dollar. The MACD was moving downwards while the price of the dollar was moving up. That sets up for an explosive move to the upside. And that's basically exactly what happened. So we closed above these levels of resistance, but we're getting close. We're getting very, very close to a major level of resistance. So a big move like this may not be sustainable. We might only have maybe 1 day left. We might have a pullback here, or we could break up over here, right, and then have a pullback there. So the risk reward to be long the dollar at this close of the candle is very, very bad. That's little Mikey would be trying to go long here. You don't want to go long at levels of resistance. So the dollar basically made a very, very strong move already. What we want to see is the dollar pull back a bit and retest. It's not the time to start going long the dollar. And because that, it's not the time to start going short the market. All right. So right now the dollar has resistance maybe 1 or 2 days away. It's not the time to start shorting. And it's not the time to start going long on the dollar. All right. So this is easier shown when looking at the bonds. All right, so the bonds yesterday, it's basically today's close. This candle basically started 2 hours ago. But the day close, right, for today, we almost closed outside of the lower level of the Bollinger Band, right? So now for this next candle, because Thursday's candle already began. So 1 second. So basically the bonds are important because they have a more correlated relationship to the market. So if the bonds are showing weakness, then the stock market is also going to be showing weakness. And this is most prevalent at extremes. All right. So we've closed below major levels of support already. And at these levels of extremes, that's when the weakness in the bonds will permeate into the overall market. So what I'm basically showing is that there is still more room to the downside on the bonds. But so the issue is that even over here, right, for example, when you look at something breaking above a recent high, right, when people start to go long, it's the perfect opportunity for them to rip it the opposite direction because they want to entice people to take the wrong direction, right? So similar to this situation, we could have maybe 1 more day where we really, really show some weakness, but we need to see a break below this low here first. If we can continue breaking lower, then that would lead to like a lot more cascading weakness. But until it's tough. Basically, the point is right now is that it's really, really tough to be extremely bearish on the bonds right here. What you would rather see is you would want to get a retest of levels of resistance before going short, right? And if you are trying to short right now, it's basically, are they going to reward late bears? The bond still has maybe 1 or 2 days left of downside. If it just continues falling, then that's when a lot of cascading weakness can continue. But the MACD indicator is it's starting to get very overextended to the downside. But we still have more room to fall according to the Bollinger Bands. So that's the main thing that's still remaining for bears. The Bollinger Bands are still intact, and we could still keep vomiting to the downside while still remaining within the Bollinger Bands. And yeah, that's it. Basically, a 1 or 2 more days. It doesn't look like there's going to be that much more room to the downside. All eyes are going to be on the lows for today on the bonds. If it breaks below that, then it's going to be very bad. It could be very bad. But regardless, depending on, so now it's basically touch and feel. We're at a point in the market where it's going to be touch and feel. And depending on how bad the move to the downside is, right? There's one circumstance that may happen, and then there's another circumstance that may not happen. So it's just going to be a dance now. It's not the time to, all right. So basically the bonds on this current trajectory, basically this is my thought process. If we do not break this low, what we want to see is we want to see some sort of strength here for at least a day or two. We want to see some strength, give back to a level of resistance for a retest of short, and then continue. But the issue is that it's probably not going to stop here. It's going to retest all the way back here, and then it's going to fall. So what will end up happening to the market if the bonds bounce like this? It would basically be in unison to what is happening with the dollar. The dollar is already maybe 1 or 2 days away from resistance. The bonds are basically 1 or 2 days away from support if it continues falling lower. But at this moment, it's just tough for people to load up on the trade. Because if you just look at it, right? We've already fallen consistently for weeks, right? And at this point is not the time to start going long. The only thing that I could see that is similar based off of this is back here. Like basically this happens often, especially during the day when the markets fall. So back here in May, right? For example, we had a huge move to the downside. Oh my God, there has to be a bounce. They painted this candle right here green, right? They painted a green candle, made people start going long on the bonds. And then what ended up happening? They just destroyed it, made another low for 2 or 3 more days. And then this was the bottom. Once everyone that tried to go long initially got ripped, once they started to go short and try to chase the trade, that's when they ripped it up. So basically, it's teetering to something like this. So to something like that is basically, those are basically the only things that I see can happening. But ideally, right, we should see a bounce soon to a level of resistance, and then that would be a better opportunity to go short, in my opinion, on the bonds. The dollar, once again, 1 or 2 more days away from levels of resistance. And once we hit that level of resistance, and if the dollar starts to show weakness, then the market is going to show strength. Cool. All right. Now let's go to the SPY, right? Very simply, obviously the S&P 450 is major support. Psychologically, very major support on the S&P, all right? And prior to levels of support, obviously, we're literally right here, right? Below 450, 448, that 447 level, then 445, then 442, 443 area, then 440. All of that stuff is still relevant and prevalent. But it's keying off of the strength of the dollar and the weakness in the bonds. And once again, this is not an opportunity to start loading up on shorts. What people obviously wanted was to go short at these levels of resistance. We're holding 458 puts, and I'm not adding into more puts down here at 450. We're at a level of support. We've already been seeing for weeks now that the market's choppy in a range, right? So you want to go long at levels of support and go short at levels of resistance. When the market is showing weakness, instead of going long at levels of support, you're patient and you're waiting for a bounce to a level of resistance to go short. So that's basically what everyone is waiting for. It's not the time to go short at support, period. It is not the time to do that just yet, because regardless, the market is crazy strong still. We jumped up from 400 to 460 in 2 months. Okay, so regardless, the market still has a lot of buyers, but now is not the time to start aggressively going short, especially at levels of support. All right, what we can start to do, what we could do is wait for like 447 to break. Then the upside momentum would really be done, in my opinion. Like, then it'd be really easy to just, that would actually be pretty scary for what would happen to the market. We could start falling down to like 440 in like a week. But regardless, now is not the time to go short. The move to the downside happened. That's great. We're at a level of support. Once again, guys, I was saying yesterday's video, I was saying today, key off of the dollar and the bonds. If the dollar is very strong, just go short. Just go short on everything and just short resistance. And don't even go long at support. If the dollar is showing strength, I said, don't go long at support. Just keep going short at resistance. And that's what we're going to continue doing. If the dollar is showing strength, it's super simple. We just trade like that, especially at extremes when the dollar is breaking above levels of resistance and when the bonds are breaking below levels of support. It becomes so much easier to just trade the equities alongside the extremes of the dollar and the bonds. So yeah, again, if the dollar breaks higher tomorrow and the market is green, once again, just go short and it should fall below. But this is going to be really pivotal. These next 2 days are going to be really pivotal, especially with Apple and Amazon earnings tomorrow after hours. That is going to be really important, because trying to short overnight on those is going to be pretty interesting. It's going to be very interesting, actually. So, you know, if they have good earnings, it depends on where we close tomorrow. If they have good earnings, we could end up this could just be an entire bear trap, to be honest, and we could just rip higher. And then that would be the setup to bring it to 464, 465. So regardless, if we continue falling, that's great for our puts. But there's so many different reasons why not to go short right now, because there's still the opportunity of an earnings run up in tech. And that would be the perfect sauce to basically bring this up to this green level of resistance, 462 to 464 area. And at that point, man, that would be devastating to everyone that tried to go short here. The NASDAQ obviously was the biggest loser today. It relatively much weaker than the SPY, closed below the level of support. Right, the IWM not as weak. But then the biggest losers, Apple thankfully showed a lot of weakness, right? Nvidia showed a lot of weakness because AMD showed a crazy amount of weakness. So the AI stocks, the chip stocks took a hit. Microsoft obviously continued to take a hit. Google also took a hit. It's starting to fill into this gap a bit. We have support down here at the gap at 127. Amazon also showed some weakness. It's reporting earnings at the same time as Apple, and Netflix also didn't really do much, and Meta also didn't really do that much. So, you know, we're seeing, and Tesla Tesla broke below its lows and also didn't really do that much comparably, right? It like held throughout the day. But basically my point is the AI related stocks took a huge hit, and the chips AI stocks took a huge hit. I just realized that Tesla is one of the only stocks that isn't really publicly incorporating AI in any of its products. So obviously they can't really incorporate AI in their driving. Elon has AI companies where he's incorporating that technology, and he has X, obviously, that uses all of the data from people's interactions and stuff like that for his neural chip company. So he has all of that data from the social media company that he bought. But there's no public entity that is tied to anything of those AI projects, because Tesla is not gaining any market share from his AI company directly. Gonna be interesting, actually. If it's gonna be interesting, because if Tesla can incorporate some sort of AI in some sort of way on paper, then Tesla would also Tesla would be pretty crazy. But yeah, sorry, I just had a little thought process there. But yeah, it's pretty interesting, very very interesting. There's a lot of things that can go on. Because X, right, the new Twitter, they're looking to overtake YouTube, and they're going to be looking to overtake all of these streaming sites, YouTube. Yeah, it's going to be pretty interesting. It could become a search engine at that point. And yeah, there's a lot of different things, but it's going to be a private company. It's not publicly traded. But then if he makes it public, not sure. Not sure. Let's see. But yeah, sorry. That was just my thought process there. But yeah, regardless, pretty fun day in the market. We're not going to be shorting this support. And what we really, really want to see is if it breaks below 447. If it breaks below 447, then even the bounces that we do get, if we do get bounces, right, they're not going to be that strong, in my opinion. And they're not going to reclaim back up to these levels. And I don't think it's going to have as much strength. So if the market ends up falling down to 446, 447, even if we do get a bounce, these bounces would just be, I don't think they're going to have I don't think we're going to get like a V-shaped recovery, if that makes sense. All right. So yeah, there's that. Regardless, I hope you guys enjoyed today's video. And yeah, please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.